All right, the answer to that is yes. Let me find my mouse. There we go. Looking at the crossover, it took a little bit of time, but it did go up finally. So you did have a little opportunity to make some money here. Let's go to the next one where the MACD cross and the histogram went from negative to positive. You had a great opportunity to make some money. So when the question came up earlier, all right, when the question came up earlier about, well, what is short term? So let's look here. Just I want to answer that question. One, two, three, four, five, six, seven. It's about, and then it started pulling over. That's about a couple of weeks, close to a couple of weeks worth of trading. Could you have made some money here? And depending on your stop criteria, would you have gotten out here? Could you have gone higher before it pulled back and went down? So, in just looking at this, did you have an opportunity? And this is to help to pinpoint the exact meaning of short-term trade. All right. When the blue line reaches the zero line, Astro, when the blue line crosses above the white line and the histogram goes from negative to positive, that's when you get your entry to get in. All right. Hopefully that makes sense. Bleed over noise in the background. It's just me now. I don't know what else you're hearing, and I know that this is being streamed. Joey came in and set that up, so I don't know. I don't hear any other noise, and I apologize if you are. All right, a lot of things going on at the same time, but the show must go on, right? Here's another opportunity where the MACD did cross. Histogram went from negative to positive. Did I have an opportunity to make money? What did I get? I got an uptrend. Higher lows, higher highs. That was a good opportunity. Keep in mind, none of this is day trading. Let's go to the next opportunity. Again, histogram goes from negative to positive. The MACD line crosses. Short term, one, two, three, four, five, six, seven. Still about 2 weeks worth of time. All right, a couple of days to a couple of weeks definitely determines short term. And if I've looked at each one of these opportunities, gotten in at the right point, gotten out at the right point, that's what it's all about. Let's go to the next one. MACD crossover. Now, this one wouldn't have worked out nearly as well. But if I've got, this is my fourth trade in the stock, three of them made me money, one of them about flat. Am I still ahead of the game? The answer to that question is yes. The answer to that question is yes. Man, if I showed you that every single trade would have made money, you'd probably be saying, well, that's almost too good to be true. All right, another example of maybe walking away even in this case. Next one. Lastly, what do you think about this one? Sure thing. Look at that. Nicely running up. And you'll see this on stock after stock. A positive MACD crossover more times than not will give you great buying opportunities. So what about the negative crossovers? All right, let's talk about those. The negative crossovers, where the negative crossover help you to protect your profits after you've gotten in here. So remember, I'm pinpointing your entries and using the negative crossover as an exit. All right, so that would have helped you to protect your profits on that stock. Negative crossover, nice jump up here. Remember when we cross over? How about getting out there? Would that have locked in profit? It began steady, decent for about a month or maybe longer, and then all of a sudden, boom. I'd rather have you out, even though the stock went up a little higher, I'd rather have you out taking that profit right there. What about this one? So we would have gotten in here. This one was the one that would have ended up right about even. There it could have ended up right about even, but even is better than a loss, right? Even is better than a loss. What about getting out here? Nice run up when the 3-8 cross. How about getting out prior to riding the stock down and then even consistently riding it more down? This is the beauty of short-term trades. Sultan says, in using technicals, do you still follow the color guard? That's a good question. And you can, and we will, and I will talk about that. Any advantage to using lines versus the histogram? The histogram will definitely show me coming above or below a solid line of zero. All right, coming above positive or down negative, I think the histogram makes it a little easier to not only see if it crossed positive, but if it's moving up higher. All right, so there you go. And how is MACD bars any better than two MAs crossing? Because there's actually three moving averages, Joseph, in MACD crossovers. You have the 12, the 26, and you have the 9, which is a smoothing moving average of the 12 and the 26. So when I look at the blue and the white lines, The blue line looks at the 12 and the 26, the difference between the two, and the white line looks at the 9, which is a smoothing. So it's actually looking at 3 moving averages and not just 2. It shows up as 2, but in understanding the calculation, one is looking at the difference between 2, and one is a smoothing moving average of the 2. Earl, you're going to have an opportunity to access this. We're going to email it out to you. All right, as far as the recording of this. What is the histogram a plot of? The strongness of the move up or down. Notice that as the bars move higher, the direction moves up a little steeper. As they move down and get lower and lower, it's the pullback. So that's what it's looking at. The MACD line is which is the signal. The MACD line is the blue line. The white line is the signal line. All right? All right, so as I look at all of these, another opportunity, this one was the one that was about even. All right, the 3 and the 3 and the 8. The MACD line cross pulled back pretty quickly. I could have made just a little bit here, or would have been just about even. All right, in the next one, nice move up on the MACD line crossing up here. Nice little run up, and then it went sideways, but the MACD crossed. That would have been a good opportunity to get out. So looking at MACD to pinpoint when to get in and when to get out, that's something that you can start using right away. Now, as we move on, we're going to move to the next indicator, which is looking at support and resistance. Remember, we're talking about 4 chart patterns. So this is the second one. Another very popular trading technique is to use support and resistance level. One of the great things about the VectorVest tool is it has a way to automatically draw your support and resistance lines for you. Let's take a look at what I'm talking about. Before we get too deep, what is support and resistance? Well, basically, a support level is a point where stock prices have stopped going down and began to go back up, typically on multiple occasions. It's where demand is deemed strong enough to push the price higher. All right, notice that we have a support line that's been tested here and here, which created a solid line, and another point here created a solid white line. And notice that each time the prices hit that, the prices bounced up. Bounce down, hit that, bounce back up. Bounce back down, hit that, and bounce back up. Tom is here, so Tom will tell you that this stuff really works. All right, now let's talk about resistance. That is the point where stocks prices have stopped going up and begun to come back down. Again, typically multiple times. Notice that I've got 2 opportunities here. It touched, came back down, touched again, came back down. It's where supply is deemed strong enough to push the price lower. You know something? It's the ultimate crowd mentality indicator. Think about it. Have you ever bought a stock, watched it go up, but you didn't sell it because you thought it would continue going up? Then what happens? It comes back down. What do you say to yourself? Well, if it ever gets back there again, I'm going to sell it. Then once the stock price reaches that level again, all the people who bought it back here, all the people who, where's my mouse? All the people who bought it back here, all right, and didn't sell it the first time, now sell it, which puts downward pressure on the stock's price, and typically it begins to fall. So how do you use support resistance in your trading? All right, that's a good question. Hold on a second. All right, how do you use support and resistance in your trading? Number 1, let's talk about buying opportunities. If you're seeing a price hitting a support level and bouncing off, that's a bullish sign. Typically, price will continue to rise until at least the next resistance level, in this case, right about here, but it blew through it, so now right about here, and continue to rise. So when price bounces off of support, that's a buying opportunity. The other buying opportunity is when price breaks through resistance, as it did here, bouncing off of support. This was a level of resistance, and it broke through resistance. That was another opportunity to buy, but you want to see that happen, especially on high volume. That means people are jumping on board with it. Volume is conviction. Think about it. If we already said there was built-in selling pressure around the resistance level, right, based on that crowd mentality, and if a stock is able to overcome and break through that resistance level, then that's a very bullish signal and would indicate buying opportunity. Second, you can also use support and resistance to indicate when to sell an existing position or to initiate short positions. If you see price hitting resistance and begins to fall back down, so if I own the stock and it starts to hit resistance and fall back down, that's a bearish sign. Typically, it will continue to fall until the next support level. And look at that. It pretty much fell to that level of support, lingered around before it bounced up again. If this is a stock that you own, you should consider selling or taking other defensive actions. And if you don't own the stock, it would indicate a possible shorting opportunity to play to the downside. Additionally, if you see price breaking through support, all right, as it did here a little bit, that is a bearish indication. Typically, price will continue to fall until it reaches the next level of support, which was right about here. All right, and in a moment, I'm going to show you how you can automatically find the stocks that are exhibiting these characteristics. All right, the next indicator. So that was really very concise about support and resistance. Level of resistance is like a ceiling, keeps the stock's price from going higher. A level of support is like a floor, keeps you from falling lower. And utilizing bouncing off of support or bouncing off of resistance to get in or out of a stock, or to even initiate a shorting position or even buying puts, is a great way to use support and resistance. Very concise and very simple to use. But those support and resistance lines were not there, or were not there. What do you mean, Cliff? Resistance can't be in the future. Resistance is not in the future. Resistance is looking at what has happened. And so when I get to that point again, I can take action. All right, so it is looking at support and resistance both in the past, so that it's serving as a historical note that once we get to those levels again, we can take action. How do you find these types of stocks, Alex? We're going to get to that in a second. Michael says, why does the lines go up when the bars are going down? Remember, when I'm looking at the MACD and I'm looking at the histogram, it's showing me the strength of the move. As the moving averages start to cross, you're going to automatically, and that's on MACD, you're going to automatically see the histogram start to move to the downside. It has to. All right, it has to. All right. So let's talk about the stochastic oscillator. I'm trying to answer all of the questions that are coming up in here as well, because I think that it's important. Is there a significance attached to the MACD lines being further above or below zero? That means it's in a stronger downtrend or in a stronger uptrend, depending on how high it goes above that zero line. All right, can you use candlestick patterns to support the directional changes? You absolutely can. This talk is not about candlestick patterns, strictly about these four technical indicators, but candlesticks can be used as well to confirm the patterns as well. Our stochastics, good question. Our stochastics are slow stochastics, not fast. But you can also look utilizing fast stochastics as well. All right, stochastics. As with other oscillators, because this is an oscillator which moves around a line, just like a fan is an oscillator, it turns around. Stochastics is an oscillator as well. And as with other oscillators, it helps to pinpoint overbought and oversold conditions. Don't let the squiggly lines confuse you. It's not confusing. Let's take a look at an example. All right, Abbott Labs. And what we're looking for these indicators where the stochastics is below the value of 20. Would you agree? Now, the lower end of stochastics is 20. The higher end of stochastics is 80. You need to know those levels to determine if a stock is an overbought or oversold scenario. Abbott Labs pulled back, stochastics below the value of 20. The stock was considered to be oversold. Would you agree that the stochastics oscillator below the 20, somewhere near the bottom of that stock's move? All right, yeah. A buying opportunity occurs when the stochastics oscillator moves from below 20 to back above 20. You can typically see a quick pop when that occurs if you're looking for some short-term trades. And look at that. Look at that pop after it went from below 20 to above 20. Was that a good opportunity to make money? All right, another opportunity. Stochastics sitting right about that level of 20. Look at that was a quick pop, short-term pop, short-term pop. But look at it was looking at at least a leveling out after the stock's price went up. Another time, how about here below 20, oversold? Look at that pop. How about here below 20? Had a slower move than some of these others, but still a winning opportunity. How about here below 20? Look at that move to the upside. All right, so now, for example, right here was a good entry. When the stock's price went from below 20 to above 20, when the stochastics went from below 20 to above 20, that's where you're looking to get in. From below 20 to above 20, that's where you're looking to get in. From below 20 to above 20, that's where you're looking to get in. Time and time again. Below 20, showing oversold, getting out of the oversold area, giving you an opportunity to get in. Once again, from below 20 to above 20, opportunity to get in. So it's setting up when it's below 20. Your action is when the stock's price or the stock stochastic goes from below 20 to above 20. That's your entry. Setting up, looking for stocks where they are oversold. Then you just watch the graphs to make sure the stochastics is now moving from below 20 to above 20. Bingo, that's where you pull the trigger. You mean below 20 and above 80? No. So 80, above 80 is when the stock is considered to be overbought and could be an opportunity to either play the stock to the downside or, if you own it, to get out of the stock. Above 80 is when it's overbought. If oversold and overbought is monitored by stochastics, what does MACD monitor? It is a trending indicator. Stochastics is not a trending indicator. It's good to use to see if a stock is overbought or oversold. But MACD is looking at a trend, moving from, is starting to move up. All right, so that is the difference. That is the difference. Stochastics will show you if a stock is overbought or oversold. MACD tends to be looking for a trend in a stock. Does it make sense to put a stop line on the chart? You can if you want to, Stephen. Remember, I'm just teaching you the indicators. I like the questions that are being asked, which means that you can add to these techniques. Yes, you can. You can definitely add to these techniques. My job today is to show you the techniques. All right? So as I continue to move on, opportunity again, below, going back above, and doing it again. You can even combine a couple of things. All right? So now not only can we use, and I just moved up in the graph a little bit more in time, I can combine what I've learned so far. So we talked about support and resistance, right? Now, notice the level of support here. All right, notice that level of support right about here as the stock's price, where the stochastics is kicked in. And up here you have resistance, right about here, right? So let's put these two together. That could be a nice profit target once you've gotten into the stock as it start moving up. And as soon as you see the price reversing off of that resistance, you can take the profits off the table. It's all about putting the probability on your side, giving you a higher probability for a winner, which will improve your accuracy. All right, so there's my level of support. So we got the indicator. How about we bounced off support, all right? Moving up, the the stochastics goes above the value of 20, so the stock is no longer in oversold territory. The stock's price falls. Where does it fall back to? A beautiful level of support. Do you get out of the trade? Well, you could have if the stochastics got you out, but putting two and two together now, using stochastics along with support and resistance, while the stock's price is falling, let's see if this level of support will hold. It did, and gave you another opportunity to still make money in it. So not only are you learning these indicators, you can learn to combine them as well. And once it bounced off of that support, went up to this nice level of resistance, would that have been a good opportunity to get out of the trade? So entering the trade, when stochastics went from below 20 to above 20, utilizing the price movement pulling back but to a level of support, bouncing off of that level of support instead of getting out, bouncing off of that level of support, using that level of resistance as a good profit target. So you can combine them all together, and that's the beauty of learning these indicators, giving yourself a higher probability. All right, let's go. Again, here we go. The level went from below 20 to above 20. good opportunity. There's a level of resistance, nice level of resistance. Now that I got in here, I can use that level of resistance as a level of a profit target. As a level of a profit target. All right. And now, what happened after that? This one bounced off of support. We went from below 20 to above 20. Look at that run up. Look at that run up. From below 20 to above 20. Oh, look at that pullback. And you know something? That may not have worked out as a trade, and that's fine. You know, I'm still showing you more trades, higher probability trades that were working out. Below 20 to above 20, opportunity to make money. Below 20 to above 20, short-term move before it pulled back down. And you know something? If I'm pulling back down, why not use the swing, the last level of a swing high to pull out of that trade as well? Remember, we're using support and resistance. Why not do that as well? Below 20, above 20, short term, pull back to where? Pull back to support. Beautiful. You say, man, that's a big pullback, but I've got a nice level of support. Let's see if it holds. And it did. And look at the run up. So not only using support and resistance, not only using stochastics, but tying them together helps to increase your opportunity to make it. And Nick also showed that you had a double bottom as well. Better than moving up over 20, which means likely to go up, Glenn. Jesse, you can use the 80 and up above the 20. Hold on. But over 80 can hold much better than moving above 20, which means more likely to go up. That's going to, a stock can stay overbought or oversold for a long opportunity. So I'm looking for the bounces. I'm looking for going above 20 and bouncing back down as a way to get out, or bouncing from below 20 to above 20 is a way to get in. All right. But why do you not get out when it came below the 80? Audie, I'm using either the crossovers on stochastics, or if the stock got to a level of a resistance level to get out. Now, can you use when it gets back below 80? You sure could if you want to. Again, you can add to it. All I'm showing you is from the graphs, good opportunities to pinpoint your opportunities. That's all that I'm doing. How do these differ from the Midas touch techniques? That's a whole different technique using different moving averages, Chandra, on a shorter time, looking at a 3-month time period. Two different techniques. Techniques. Maurice says, how do you draw support and resistance where to where? From a high to a corresponding high. What you're looking for, remember, Maurice, if resistance or support is a level of a floor or a level of a ceiling, you'll see that on the graph. It will create, you will be able to see on the graph if there is support and resistance, where there is a floor and where there is a ceiling. What values do you use for stochastics? We use whatever the industry standard is. We're using the slow stochastics. We start off with just the industry standards. All right. Can any of these methods be incorporated into the Portfolio Genius for trading? The answer to that is yes, and Richard, we will get there. As we start to get into a little further, another technique is called Jerry's Gems, and it's a search. The last technical indicator we'll look at today actually combines two indicators because it's more of a trading technique. It uses Bollinger Bands and an indicator called the DPO. Actually, we used to do that. This is a little different. That was used for Dr. Barbara Starr, which was for Star Search. Now we're looking at Jerry's Gems, which is looking at a 50 and a 150-day moving average along with stochastics. All right, a 50 and a 150 moving average. Hold on, 50 and a 150-day moving average along with stochastics. All right, what we would do at this time was use Star Search, but we're not doing that anymore. All right, so let me show you how Jerry's Gems works. What we're looking for is for the stock to be, and I'm using a 50 and a 150, using a 50-day moving average, a 150-day moving average, and I'm looking for a pullback to the 50. But I'm also looking for big distance between the 50 and 150, which shows me that the stock is not only in an uptrend, but in a strong uptrend. All right, in a strong uptrend. Make sure. Okay, good. I'm using a strong uptrend. All right, and we're looking for stochastics to go from below 20 to above 20. So again, we're combining two things. We're looking at the stock's price to be above the 50, and we're looking for the 50 and the 100 and the 150 to be nice and strong apart which helps to show me that it's a good uptrend, and I'm looking for the stock to go from get out of the level of being oversold. All right, so here we are with Federated. All right, and with Federated, the stock's price pulled back to the 50. All right, so it's a pullback kind of scenario, but above the 50, the stock's stochastics went from below 20 to above 20. And what we're doing is we're using that pullback, bouncing off, waiting for stochastics to tell me it's no longer an oversold, giving me a good buying opportunity, and look at the run up. Now, once you're in it, once you're in the stock, what is your initial stop? Looking at the previous swing low. If the stock's price pulls back and goes below the previous swing low, that's an opportunity to get out. All right, when can you get out to the upside? Well, if the stock's price breaks above the most recent high, you can get out of it then as well. Or look for levels of support and resistance. Now, that would have been a good level of resistance. The stock's price broke above resistance, didn't come back down. That told me that I could still stay in it, and it ran up nicely. Then it gapped down, but even with the gap down, man, how about a candlestick formation here? A bearish engulfing. This is where tying in candlestick knowledge works out as well. But don't be afraid if it goes above that previous high level to take half off the table and let the other half run. So take high off the table, let the other half run. Jim, these moving averages, the 50 and the 150, are simple moving averages. What if you just put a 2% trailing stop? David, you're not giving those stocks enough room to run with just a trailing 2% stop. All right, you probably need to give it more than just a trailing 2% trailing stop. That's real tight. Notice that some of these stocks can pull back that quickly. And how about if I were in this? Let's say I got into it here for whatever the reasons. The pullback was back to the 50. Didn't, but in this case, I would have gotten out because I would have gotten out at the most recent swing low. That would have automatically gotten me out. So I think the trailing 2% is a little bit too tight. Audie says, so on swing trades, the earnings will not be consideration. In this case, these are technical techniques. And for the most part, what we're doing is looking to see if the stocks are meeting the characteristics of the technicals in order to get in. Remember, we're looking at 4 technical indicators to get in and out. So all of these are based off of technical indicators. Does that make sense, Audie? Maurice says, Glenn, can you show what it is clear of resistance? What do you mean clear of resistance? So in this case, I have a nice resistance level right here. If the stock's price breaks above it, I would still be in it. 1, 2, 3, 4, 5, 6, 7, 8, 9, about 9 days, almost 2 trading weeks. And if it broke above, that would be a good opportunity. Or if it got to that level of resistance, I could take half off the table and leave the other half on just in case it breaks through, and I'd be a happy camper. All right? Jerry's Gems are for swing trading, Nick. That is absolutely right. Bronco says, I use the 5 and 10-day MACD. Again, my MACDs are using the industry standards. I did not alter them. So if you feel comfortable using the 5 and the 10, Bronco, by all means, do so. All right? Now, let's go to the next one, which is Cogent. All right? 50, the stock's above the 50. Look at that pullback to the 50. Look at the big distance between the 50 and the 150, initiating, telling me that the stock is still in a good uptrend. Stochastic goes from below 20 to above 20. Look at that kiss. Boom. Where's my initial stop? If the stock's price breaks below my most recent swing low. Notice the price never did. Where's my initial get out to the upside? Looking at the swing high. How about it did break? We would have been in it 1, 2, 3, 4, 5, 6 days. Would I have made some money? I sure would have. I could have taken half off the table and let the other half run, and look at that, it would have still kept on running. In the case where earnings is in this one, the earnings is doing well, but remember, we're using technical indicators to get in. All right? So, now, can these indicators help you in your trading? Does anybody want to answer that? Do you see where these indicators can help you in your trading? Type a yes or a no in the room. All right? These are straightforward technical indicators. All right, we looked at MACD. We look at support and resistance. We looked at stochastics. And we looked at a search looking at Jerry's Gems. 4 straightforward indicators that you can start using right away. That's it. All right. Now, as I go, you can use technical indicators to pinpoint. Remember, we saw that screen. So we were talking about accuracy. One of the things that I promised you is technical indicators can be used to help to improve your accuracy. In other words, it can help to increase your percentage of winning trades to between 50 to 65%. All right. So now you got to ask yourself when to search for trading candidates. All right. It's not enough to know what the indicators are. So we talked about what the indicators were. We want to put the probability of success in our favor. To do that, you need to know the best time to trade. All right. This is going to help you improve your results, reduce your drawdown, and increase your percentage of winning trades. Why? I've talked to a lot of traders, and many of them don't know when to enter the trade. So I can show you all of these graphs to show you what to do and how to do it. Ron asks, can VectorVest notify crossovers? The answer to that is no. David says, do you need a directional market for these? And that's what we're getting into right now, David. That's exactly what we're getting into right now. Saeed says it goes down to the moving average 50. How can we identify it? Any ideas? You can use searches to find stocks retracing off of a 50-day, or look at a graph to see if the stock's price is about ready to bounce off. So a lot of this, Saeed, was just looking at graphs to see what was going on in individual graphs. Now, if you get confused on when to enter the trade, you're getting mixed signals. And if that happens, that means you don't have any confidence in your ability to know when to get in. You look at this traffic light that you see right here. Who knows what to do with that traffic light tree right there? All right? So, clear entry points. Instead, you want clear signals to tell you it's time to enter, which gives you the confidence that the trend is going to continue. Why is that important? Well, I'm going to answer that for you. I'm going to show you two portfolios. One, doing these techniques without market timing, and one doing these techniques with market timing. Notice that my percentage winners with market timing is higher than my percentage winners with no timing. Notice that my annualized rate of return is higher with using market timing as compared to without market timing, 30 compared to 21%. And also understand that my max drawdown is lower, all right, is lower utilizing market timing than without using market timing. So, mixed signals, take them away. Market timing is going to help you. It gives you a better percentage of winners. You get a better rate of return. You have a lot less drawdown. So let's look at how to do it. All right. Here's our market timing graph. Market has ups and downs. We have something called the VVC, or VectorVest composite, which tracks the move of about 8,300 stocks. We can clearly see when the market's moving down and clearly see when the market's moving up. And then we can also see when the market's moving sideways. While some people use moving averages on the S&P, let me show you what we have found to be effective. Let's zoom in a bit, all right? I don't have the time to get into all the details of how it's calculated, but the software takes care of all of that. Basically, we found it better to look at over 8,300 stocks instead of just the Dow 30 or the S&P 500. One of our best signals uses technical indicators, just like what we talked about today, to signal changes in the trend. We call it our DEW timing signal. The DEW represents the trading indicators that are located, such as the D stands for the detrended price oscillator. The E stands for envelopes. We provide you with upper and lower envelopes to show you the upper and lower end of price. And the W stands for 30-day weighted moving average, which is shown here by the white line. Basically, we use the DPO and the weighted moving average to look for crossovers. When the signal changes, it puts a green light on the graph. Overall, it does an excellent job of keeping us and you on the right side of the market. I love that it's very rules-based and there's no guesswork or emotion involved. When the price goes above the 30-day weighted moving average and the DPO is positive, it signals an uptrend. When the price goes below the 30-day weighted moving average and the DPO goes negative, it gives you a bearish trend. Plain and simple. It is very rules-based. Now, utilizing that market timing on two of the same exact portfolios gets you the difference between what's going on without market timing and what's going on. Look at the equity curve. Look at the equity curve is a lot smoother. Helps to improve accuracy. Helps to improve probability. And just, yes, this equity curve still looks good. I don't disagree with that. But when the stocks in this portfolio started leveling out, these continued to rise because we knew when to get in and when to get out. All right? All right. So now, do you see how using market timing or the DEW can benefit your results? Yes or no? Do you see not only that these indicators work or could work, but now tie them into market timing, that it helps to increase your opportunity to make money. Nick says 30-day weighted moving average. Yes, that white line is a 30-day weighted moving average on the DEW. All right, so I'm watching the yeses come in. Outstanding. Thank you for that. All right, now you can use technical indicators to pinpoint. This is the same slide, but now it talks about one of the things I promise is that it will help you to improve your results. Market timing, using that DEW timing signal, does increase your ability to make more money. All right. Now, next you're going to need to know how to start searching for the candidates. That was a question that came up. How do you find these stocks? All right. So you need to be able to narrow down your list of candidates from thousands of stocks to just a few and not spend hours upon hours doing it, right? So now when you're able to do this, this will help to reduce your time. We've already checked on accuracy. We've now just recently, just the past slide, talked about results. Now we're going to address the time. Another side benefit, if you do like it, like what I'm about to show you, you can also use it to help you to improve your results. All right. The problem is, even when you know what technical indicators are and how to use them, it's still up to you to find the stocks to actually trade. Sometimes it feels like trying to find a needle in the haystack, right? You go through thousands of charts and it's just time consuming. Well, with being able to utilize these techniques, you can easily find the best candidates. Let me show you how we do it. All right, this is the how. There are three main ways to find your trading candidates. One is the one-by-one method, which means you look at one graph after another, and that's where you could be there going through 500 charts in a day trying to find these patterns. There is using the search, which will help you to narrow down the field of candidates, and then there's getting automatic alerts trading candidates meeting your criteria. When you use the one-to-one method, typically in 50 to 100 range, 100% range of buyers. Okay, so you're in just in the normal way, in the normal percentage of people. Using a search typically will get you in the top 50%, and then auto alerts get you in the top 25. So being able to move from the one-by-one to the search method to the automatic alerts moves you up a tier in probability. So let's do each one. Let's start off with the one-by-one. The one-by-one, so you go look at a group of graphs, and maybe you start off with the S&P 500. Why? Because those are stocks that you already know. So how to load the graph? Let's take a look. You can look on these individual stocks one by one. Look at their graphs, all right, to see what stocks are exhibiting a MACD crossover or stochastics going from oversold now getting back into its normal range, or put a 50 and a 150 moving average and look, you have to just go look at the graphs one by one. The second method way to go is to use a search. All right, VectorVest does have a search tool called ProTrader, which is our technical searching indicators. All right, technical searches within the Unisearch tool, which plugs right into the main software. I know most of you likely don't have this tool right now, and if you don't, just keep an eye on what I'm showing you here so that you can see what it does. Later on, I'm going to show you how you can try it out if you want to. So you go to the Unisearch tool. There's a folder, if you have Unisearch, called ProTrader. This is where all of our technical searches are. If you're needing to do a technical search on moving averages, crossovers, or any of our technical indicators, you have to have ProTrader in order to do it, and it is an add-on module. So in the ProTrader folder, you will find something like the stochastics crossing above the 20. So when someone asked me already, how do you find some of these stocks? Where the searching methodology is the way to do so. And there's the stochastics crossover. You run the search, it'll show you the stocks that are in it. All right, so let's do it. From this point, let's get into it. You see that on December 28th, a few things are going on. All right, the VectorVest composite formed the one white soldier, coming off the bottom, one white soldier, and stochastics on the VVC had just crossed above 20. All right, just crossed above 20. Let's say you reacted to that as signal on 1228, and you went out to find stocks that had the stochastics crossover. All right, a good time to start thinking about. So you did that, you ran it, and you're in it. All right, a good time to start thinking about taking profits is here on 114 when the VectorVest composite hit a level of resistance. That's a great opportunity if you got in here from a market timing perspective to get out. All right, it settled down in that zone for a few days and broke out through it. That's why you don't simply exit when the price reaches resistance. You wait to see if it's going to retrace from it, and it didn't. But even if right here you took half off the table, you'd still be fine and let the other half run. All right. And then from that point, where would you have gotten out? Boom. At the next resistance level. Next resistance level, take the other half off the table, folks. You would have made money here. You would have made money here. And what did you just do? By way of using the techniques that we showed, you've increased your probability to make money in that trade. All right. So now let's do this again. So on 1228, is when we would have gotten in when stochastics crossed over. We would have run the stochastics crossing above 20. We would have done a quick test up until that time about 2 months later. In that search, look at that. How cool is it that crossing above that level of 20, showing you that the stock was no longer oversold? All 10 stocks made money, up 17% where the market was up 12%. All right, that's awesome. Another stock, individual stock. So let me go back. 2 stocks made a lot of money in here. MOH was up 23%, and FI, a lot of stocks were up. But this was one of the biggest mover, MOH. As we go to look at that, all right, that's where you would have gotten in. All right, on the date, that's where you would have gotten. Look at that, right from the onset, the stock's price pulled back. You're like, man, this stuff sucks because I got in when it was supposed to, and all of a sudden the stock's price pulled back down. Where did it stop? Right at resistance. How did I know that was resistance? Look at that intraday wick on that candle. That was the last point that the stock's price had a hard time going down. And where did it stop? Right at that level. You say, all right, give it another day. Let's see if it breaks below that. And it did not. It rebounded. A bullish harami. Look at the run up. Now, where would you have gotten out to take profits? Right at resistance. Stock's price moved sideways. Take half off because it never fully pulled back down. Take half off, let the other half run. Another opportunity. This was another stock that did very well in that quick test. EWBC. There's where you would have gotten in, where the stochastics went from below 20 to above 20. Entry there. Stock just went up. That was your level of resistance. Great opportunity to take that trade off the table. That's what I'm talking about. But now, how about it? It stopped right at resistance, never really retraced back. Take half off. Look at that run back up. And even here, when it pulled back down, serving this as a prior level of resistance, as now a current level of support. Did it break back through, taking the other half off the table? No. It stopped right there and went back up. That's your next level of getting out. Learning how to read these charts is what it's all about. What are your specs on your slow stochastics? Whatever the indicators say, I don't know. And the reason why I don't know is because I use them as the industry standard. It is slow stochastics. All right, and it's whatever the industry standard is, John. They are not modified. They are the industry standards for slow stochastics, my friend. All right. Now, let's do the same thing, running the search, but now looking at support and resistance. How about breaking through resistance? Remember, breaking through resistance is a bullish thing. Well, I'd say 2% above. That's good confirmation of the move above, right? So I can go through and look at search after search. So we showed stochastics. You can do it on support resistance. And if I wanted to use the DPO and things like that, I could do that. They're all located within the Pro Trader search. All right, so we talked about the one by one method. We talked about the search method. Now let's talk about the automatic alerts. All right, within the Portfolio Genius, we have portfolios that you can build or trading systems that you can build that you can set up alerts for to send you alerts when stocks meet that criteria. Or we have something called the watchdog that we can set up on MACDs crossing above or below, support and resistance crossing above or below, and it will generate a list of stocks out of the database that meet breaking MACD crossing positive or breaking through support and resistance. It will automatically and send you alerts for when that happens. How cool is that? All right, INCY was one of the stocks. Let's go back, which was one of the stocks in that list. All right, it gives you not only the date, it gives you the time that it hit. And it tells you that it met the criteria of, in this case, breaking where the bullish S&P 500 stocks. Actually looking at the S&P 500 with a MACD cross. All right, here's the stock. This was the date and the time that it hit. Look at that, MACD. So now I get the alert that it hit. And throughout the, and look at this, how many days? 1, 2, 3, 4, 5. One trading week. Is that not a bad trade for one trading week? Remember, these are short-term trades. But, man, I'm holding it more than just for a day or more for just a day trade. Lawrence says, can you search for MACD crossovers on a watch list? Yes, you can. I can take that watch list, build it into a search, and put in the MACD crossovers. Yes, I can. All right? So, that is on INSY. That was in that list. FANG was also in that list. That was the date and the time that it hit. Look at the MACD crossover. How many days? 1, 2, 3, 4. Again, 5 days. Remember, short-term trades. And I've defined what short-term trades were earlier in the presentation. That's not bad for a 5-day period. That's not bad. I've saved myself time by running either a search or a watchdog. I'm increasing my probability knowing that the indicator kicked in, and look at the results. Look at the results. How much time do you think this would save you? This would save you a ton of time. Now, buy at the open, Ron says. In real life, looking at the watchdog pinpoints it throughout the day when it's okay to buy. And it's not always at the open. So no, it all depends. It all depends. So there you go. I think that it would save you a ton of time. I'll answer the question. Even if you don't want to, I'm thinking that I'm going to save you the time. Avinash asks, is that a weekly chart? No, that is a daily chart, Avinash. That is a daily chart. All right. Remember, my promise at the beginning. One of the things I promise is that technical indicators can be used to help to improve your results, also reducing the amount of time that you spend. In other words, using a tool like ProTrader and Watchdog can help you drastically reduce the time you spend looking for trades and improve your results. All right? Also, at the very beginning, I said the main thing you wanted to take away from today's webinar is that you need to make sure you have the right techniques or tool for the job. So, here's a checklist that we feel every tool should have, no matter what you're using. All right? It's got to have the technical indicators you use, whether it's VectorVest, whether it's your broker's account, whether it's another software. It's got to have the technical indicators you need. You need to have searches for technical setups, looking for the stochastics going from below 20 to above 20, looking for stocks that are breaking through resistance or breaking through support. Market trends. You need to be able to time the market, and this is what separates us from many other systems out there. I can help you time the market by way of either the DEW, which is a technical timing signal, which I think is ideal for what we did here. But you've got to have market trend signals. You got to have pre-built trading systems. You got to have an alerting system. So all of these things, whatever tool you're using, needs to have all of these things to be able to give you what you need. All right? Now, with VectorVest, you're going to get the real-time subscription, which is at $1,295 a year. You're going to get the Pro Trader searches, which is normally a $495 one-time fee. You get it included in VectorVest. Watchdog, one-time fee of $495. Auto Timer, one-time fee of $495. You put all of these together, it's a total value of $2,780. special offer, 11.95. So we've taken a lot of money off of that with the real-time subscription. And if you want to get this special, and I'm going to type it in the room. I got to get my mouse. I got to type it in the room. www.vectorvest.com/trade better. So in the chat box is the link. In the chat box is the link. All right. Thank you very much, Gary. Michael says, do you have a tool to help us time the China trade news? Yeah, I wish I did. Yeah, I got it. It cost you $1.2 trillion to get it. There you go, Michael. Yeah, it's called VectorVest Next Day. And yes, and I'm being facetious, my friend. I am being very facetious. And I'm just, so that's all. I'm just letting you know. Santi says, hey, today my calls are giving me a tremendous returns. I also took the doji and hard candles as well. There you go. I love options. Options are a good way to go. Thank you. I appreciate that, Karen. All right. So, 11.95 special offer. But wait, if you take advantage before I log off today, oh yeah, I got to add one other thing. Even with this price, there is a $96 a year charge for U.S. exchange fees. It's to give you the real-time data. It's $96 added to that price. If you're in Canada, it's a much bigger price. It's $372 a year, and it's only for this pricing is only for non-professionals. If you are a professional, the pricing will be considerably different. But what I am going to do is, if you fast action bonus, if you do it before the end of today's webinar and you type I'm in, somebody already did. If you type I'm in, you're going to get the price, take $100 off. It's going to be $10.95, but you have to order before the end of today's webinar. It's got to be. So if you've now clicked on that link, it takes you to the link. You signed up. Type in I'm in. I'm in. You want to trade successfully in all markets, not just in trending markets, but non-trending markets like we've been experiencing recently. This is what you're looking for. Now, special bonus. If you decide to take advantage of this, and this is good to go up until next Tuesday, you will get, if you sign up for the real-time software, you will get the Swing Trading Success with VectorVest. That is a webcast a course that we've done. It's a paid course that you will have access to for free. The VectorVest method of analyzing stocks, how to determine market direction. We talk about risk management. We then get into precision swing trading and trading in the fast lane. So I told you a lot of what we're talking about here. And if you sign up and you do it before next Tuesday, you will get this as a bonus. It is a paid course that we will give to you. All right, and with that, I want to say thank you. So if you have gone to the link in the chat, which looks like this, hold on, let me click on it. If you've gone to the link in the chat, it looks like this. All right, and if you've done that and you filled it out, I want you to type in the room, I'm in. Dagnabbit, how do I move this now? Uh-oh, I broke it. I want you to type I'm in. I can't move it now. That stinks. Anyway, I'm already done anyway. If you've already filled this out, type in here, then I'm in. What about an elite member? The pricing that I've given Bupin is already elite pricing. So Sultan, for Canada, it's a little more expensive, especially because of the exchange fees for real time in Canada. So it is a little bit more expensive. I've already got Vector real time. Do I get it? You already have real time, Theodore. You already have real time. This is for the people who do not have real time. Ewan says, does this discount apply to existing member? If you do not have real time, you can take advantage of this, Ewan, even if you have end of day or intraday, you can still take advantage of this. Yes, you can. What happens at the end of 12 months? It will automatically bill you unless you call to cancel, but it will bill you at the higher rate of actually $1,295. This rate that I'm giving you is a special for taking advantage of this webcast here today. By the end of the year, if you do not renew at a lower rate, it will automatically renew at the normal rate of $1,295. Can we get the swing trading course even if we're currently RT real-time users? Richard, the real that swing trade course is part of a bonus for signing up for this. So that is the answer to the question. That is the answer to the question. All right. So again, before I leave, if anybody's taking advantage of this, before I leave, type in "I'm in" to let me know that you've taken advantage of it, and I want to personally just say thank you. Thank you, Richard. I appreciate that. Yes, this is being recorded, and there will be a replay. I apologize for the intermittent in the beginning as we were trying to get this streamed. I do apologize, but I thank you all for your patience because not very many people left. All right, not many people left, so I do thank you for your patience as we were making that happen. Thank you, Fred, letting me know that he's in. Again, folks, that price that we've given you for $1,095 is the best price out there that we have as far as the subscription is concerned. And if you like being able to utilize those techniques, it's there for you. All we've done is hopefully open up some eyes to those techniques that you can use really right away. Right away. All right, Jesse says it's well worth it, but like breathing, you need the air and it is highly addictive. Thank you, Jesse. Jesse is in a lot of my webcasts. So there you go. All right, so I'm going to give another few minutes. Still going to answer your questions. But if you want that special price of $1,095, you need to let me know that you're in before I leave, because once I leave, the price goes back up to that $1,195, which is still lower than our normal annual rate for the software. All right, so just keep that on. Robert says, what is the Super Watchdog? The Super Watchdog is the watchdog, but that uses more than just the MACD and the MACD and support and resistance. With the Super Watchdog, you can tie in any VectorVest search to show you what stocks are brand new to that search and send you alerts. You can do that as well. The price covers real-time and Pro Trader also. Yes, John, it does. Frank lets me know that he's in. Very good, Frank. Thank you for that. Santi says, I do miss you. Are a great person and a mentor for me. A mentor for me. I learn a lot from you, Glenn. You're awesome. Thank you, Santi. Joseph says, buying and selling stocks only, or does this apply to options? So, good question, Joseph. If I like the stocks as a whole, when I see these indicators hit, and I've shown you the high probability of the stocks making money. If I don't want to play the individual stock and I want to leverage my money with options, what do you think the options are going to do on a rising stock? So yes, can you put in options on this? The answer to that is yes. Can I trade the options rather than trading the stocks? Yes. If I like what I saw here as far as the less time to get in, the accuracy of getting in the results, if I like those things instead of buying the stocks, yes, I can trade the options. What does the profit locker 50% 15 mean? Does it mean 15% of the stock's price or the max profit of the stock? So Carl, a profit locker 50-15 means I'm looking for, it's sort of like a gain loss, but it's a little bit more of a trail. On a gain loss, you only get in, you only get out whether the stock is up 50% or it's down 15%, nowhere in between. With the profit locker, even though I may not have hit the 50%, as it gets closer to 50%, it starts locking in profit, so I don't get out all the way at the bottom of 15%. That's the best way to explain that. So it's like a gain loss, except for as you get closer and closer to your profit target of 50%, it starts locking in profit. So when it does drop down, it gets you out a lot sooner than waiting to go all the way down to 15% to the downside. All right, Joseph says, thanks, stop loss op for options, or is that ill-advised? No, that's up to you. Do you want to make sure you're buying? Well, remember, when you say stop loss, you're buying and selling strikes. So you're going to be either in the money or out the money. So that's the best way I'm going to answer that. Calvin says, will there be a replay? The answer to that is yes. Can I cancel my real-time subscription and get this one? No, James, you're already on a real-time subscription. Fred, I just answered that question. I mainly trade options. How will this help me? If I like the setups, that I'm looking at from these 4 chart patterns, instead of trading the stocks, I can trade the options. All right, so I was just answering that for Joseph because he said the same thing. He likes to be able to apply this to options. If you like the way that these setups work on individual stocks, you can do these for options as well. Ewan says, right now I'm using a monthly membership on VectorVest Real Time. Can I get this discount if I sign up? Yes. So you're not on an annual subscription. You can do that. You can move from your monthly subscription to an annual subscription. The answer to that is yes, you can. All right. All right. So now I'm giving you about 1 more minute to take advantage of the 1095 price. If you have, type in the room, I'm in. Type in the room, I'm in. Once I shut down this webcast, it will go back to the price of $11.95, which is still a discount from the current annual subscription. So either way, you're saving money, but you're going to save more money if you take advantage of it before I leave. All right, so there you go. I'm in, done, submitted. Thank you, son. I appreciate that. I appreciate that. So you got to give us swing trade. Oh, says John. Are you in on the Jockey Club, John? You must be. I told you, I'm going to make Ooh Wee go viral. I'm going to make it go viral. All right, folks. I'm getting ready to shut it down. And again, I thank you all for your patience for the beginning of the presentation. I really do. But it was a last minute thing, and we got it all squared away. So with that, folks, I'm about to shut it down. All right. Anybody else want to get in before I shut it down at the price of $10.95 instead of $11.95? Going once. Going twice. Anybody else want to get in? 3 times a lady, and I love you. All right. There he goes. That's my only one singing song for the day. Thank you guys for being here. Again, as I mentioned, I totally appreciate it. I'll get this recording out to you as quickly as I possibly can. With that, folks, have a great day. Adios, arrivederci, ciao, au revoir, sayonara.